What do you make of the big announcement, the big acceptance of preliminary talks between Woodside and Santos?
Not a fan at all. We own Woodside shares in the portfolio. We don't own Santos for a range of good reasons. 4 things that we don't like about this merger. Firstly, the synergies. I mean, it's very tough to see much in terms of synergies short of head office costs. I mean, the analysts have got to $100 to $200 million. That makes very little sense. Secondly, some of the synergies are being talked about that Woodside's experience in the Gulf of Mexico may help Santos with their Alaskan oil field. But for me, that analysts that have come up with that clearly failed high school geography. There's about 6,000 kilometres difference between these 2 projects, and one's onshore up in the tundra, others in the deep water in the Gulf of Mexico. There's very little synergies there in terms of expertise. Secondly, there's a lot of ACCC and regulatory risks in this thing. We've all seen the Papua New Guinea government come out this morning saying they don't want to lose any jobs. They want to keep the focus on Papua New Guinea. Over the weekend, the South Australian government said something very similar about Santos. With a lot of these, the combination of these two companies will have significant gas market share in both Western Australia and East Coast. So may see sort of a range of forced divestments, which I'm not going to be too happily. Thirdly, I mean, Santos brings rather inferior assets to the table. Whilst the PNG assets are very good, a range of their other assets are pretty sort of ho-hum. We're seeing declines in the Cooper Basin, from problems with finding the gas to fill up extra trains at Gladstone. Firstly, Woodside has a great set of quality projects all around the world, and they've only just finished they're only starting to fully digest the major assets that have come on from BHP. Taking on Santos will reduce management focus on their existing assets. They've got 3 major projects on the go at the moment: Sagamar in Senegal, where we have Trion in Mexico, and then Scarborough Northwest Shelf. The managers have got a lot on their plate. There's no real need for them to do this particular deal. So we'd be voting against it. I think it's great for Santos shareholders. Right. We've seen that Santos has rallied, but not so great for Woodside.
So Hugh, the points that you made about inferior assets, regulatory hurdles, minimal synergies, I wonder why they're not getting the message.
Yeah, it's I'm not. The share price tells you that. We saw Woodside share price fall off dramatically when that sort of came through. I'm not sure. I mean, management teams like to build things. They get wonderful pictures from investment bankers. But Santos has dramatically underperformed Woodside over the past 10 years in terms of share price performance. It is down 20% below Woodside. The quality assets are rather mixed in a lot of declining fields. They've also got a range of capex plans coming forward. I don't think it's really prudent for Woodside shareholders to fix some of the Santos issues.
Do you think that there could be an element of hiving off the inferior assets to spruce up the overall balance sheet?
Yes, but the question there is to who? Incoming buyers know these inferior assets and fields in decline. You're not going to get a great price on them. They may be forced to sell some of these assets due to competition concerns, in which that situation you're not really going to get top dollar for buyers when the buyers know that you're forced to sell it. So, yes, we could see a bit of cleaning up.
Hugh, I agree with you. It's very hard to sell assets that are not yielding enough. But, even a bad asset has a price. So I'm saying that even they could get off these assets off their balance sheet as distressed sales, but at least not carry the burden and clean up their own accounts.
Yes, they could do. They could do, or they may be forced to sell those assets. But ultimately, if the buyers know you're forced to sell it, and these assets are in decline, then you're not going to get a great price. And ultimately, ends up being sort of potential value destruction for both sets of shareholders.